Well, during the past year of economic uncertainty, deal activity both globally and locally remained restricted. Only a few notable deals were reported internationally, while on the local shores, potentially big deals collapsed. Ernst Young has just released its review of activity on the merger and acquisition front for 2009, and Sifiso Shongwe, Director for Transaction Advisory Services at the company, joins us now to unpack that, along with some of the expectations with regards to activity for this year. Thanks so much, Sifiso, for joining us this afternoon. Well, we saw last year, broadly speaking, companies moving swiftly to actually conserve cash and protect margins. One would assume that that being the case, merger and acquisition activity plunged last year in line with the global economic downturn. Overall, what did it spell for activity in this arena? Is that necessarily the synopsis?
Yeah, that's pretty much accurate. I think it's a couple of implications. One, looking at this particular recession, I think it's a little bit different from previous recession, in the sense that in any recession you have companies that are cash flushed and that there's companies who are under distress. Now the amazing thing here is that there's an issue around valuation, where you have companies with cash, but it's difficult for them to acquire, mainly because of the issue around valuations. The valuations have been coming low, so the target companies are actually not happy accepting lower valuations.
And what's interesting is that in that context, we didn't necessarily see any hostile takeovers as we've previously seen in, in boom times.
No, absolutely. I think the trend has been more on the trade side. We've hardly seen any cash, for cash transactions. I think companies are looking more for, for synergies. I think technology has also been a driver. For example, if you look at MTN acquiring Verizon, mainly because, I think with telecommunications companies, the shift is moving from telecommunications more towards technology. Yeah. We've also seen Telkom acquiring MWeb from Naspers.
Well, you've touched on just some of the acquisitions we've seen here on home ground. I mean, how did activity on the local front actually compare here in South Africa to the global trend?
There's almost a direct correlation. We know that globally activity is down 51%. In South Africa, not as bad, it was 21% down. But the interesting trend, though, is that we've seen a lot of consolidation, especially around the property sector. We've seen the transaction, the redefined income fund, a transaction whereby they've actually acquired at Apex High and Madison Properties.
In fact, that was the biggest transaction last year, because I was chatting to Stephen a little earlier, before the show, and we were saying that with the whole MTN and Bharti fanfare, it kind of eclipsed any real deal that actually went through last year.
No, absolutely. So actually, funny enough, for the first time in a while, actually, we've had a property deal actually almost top our table.
Well, distinctions have to be made, though, between the big deals and the small deals, and within various sectors as well. I mean, I came across an article saying that the distinguishing characteristic of the recession in the metal space, for example, if we have to use that sector, has been that the sector has come through the recession without any major bankruptcies, partly in consequence as a number of M&A deals actually transpired in 2009, but for much, much smaller sizes. Is that what actually came through in that arena specifically?
No, that is correct. I think the smaller deals have gone through, but also we've seen, though, that with mining, probably it's the opposite, where the focus has been more on the operational issues and around the preserving of capital and balance sheet restructurings.
In that context, let's take a look at the year ahead, and what do you see driving some of the merger and acquisition activity this year, and where you see it progressing to?
I think consolidations. We're going to see a lot of consolidations. We've already seen it in the property space, but I think telecoms. We've seen what has happened with Bharti and MTN. Interestingly enough, Bharti is now in the market, actually looking at Zain, which is a telecoms company operating in Africa. But we know, for example, that the South African market is saturated. Africa is almost saturated. So consolidations will play a major key role. One of the issues that we've touched on is the trade-related transactions, where there will be synergy-related transactions with less cash actually exchanging hands.
Well, empowerment has ranked in the past as a significant deal driver, but we've had caution at the start of 2009. I think it was that there was perhaps these deals at most risk, of course, as credit conditions conditions weakened and free cash dried up. Just how much or to what extent has this fizzled as a driving force to activity in the merger and acquisition space?
Empowerment is facing, BEE is facing challenges. I think we know that, especially around the issue of funding. But I think the good thing, though, is that with the new amendment to the Companies Act, which will basically allow companies to offer financial assistance, for example, by way of buying back their shares or issuing credit enhancements to potential bid transactions, we feel it will promote much more vendor-financed sort of typing, other than the third-party bank financing that we've seen in the past, which we think will actually assist in helping BE transactions go forward.
That within the domestic realm, let's look at cross-border activity. I mean, how optimistic or enthusiastic are South African business when it comes to cross-border activity?
There's no option but to be excited. I think we know about BRIC. And we know how influential and how big the markets are. But the interesting stat, though, as much as China has 1 billion people, but it's amazing to know that actually Africa's population has just hit the 1 billion mark. So which means it makes this Africa as an emerging market an area to focus on. Obviously, it's not easy at doing business in Africa. You're dealing with a lot of countries, the sovereign issues, there's cultural issues. But if you look at a market growth, the emerging market, especially Africa, is an area for growth.
Well, certainly India has cropped up as a serious contender for acquiring global businesses. I mean, when it comes to actual muscle, how do we compete against a player like India?
I think muscle, we compete, but the issue, though, is the will. I think what we've seen is that with the Indians and the Chinese, they've actually taken the step, they've taken the initiative to get into Africa, to understand how Africa works, because it's not an easy area to do business. So ultimately, South African companies don't have an option, but the question is the will to actually do business in Africa.